Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Tuesday afternoon, we have Frederick, Managing Director of Trading Derivatives at the Schwab Center for Financial Research, to discuss Nasdaq-100 performance and trends, thoughts on earnings, and of course we have the key FOMC rate decision this morning. And Randy, I'm sure Nasdaq-100 traders were happy to see April go and start a fresh month for May.
No question about it. As you said, over the long haul, Nasdaq-100 has been a terrific index, but it's in bear market territory right now. And not only that, the volatility index, the vol-Q, is only about 5 points below its year-to-date high. It's been a tough time lately for tech stocks. As you know, they tend to be very high beta. The tech sector overall, as a sector of the market, is the highest beta of all the 11 sectors. And the NDX is about 49%, I think, if I'm not mistaken, technology stock. So it's been clobbered a little bit. But you know what? As you said, May's a new month. We have a Fed meeting tomorrow, which is critically important. And there are rumors out there that it could be one of those periods of sell the rumor, buy the news. So there's a possibility we could see a bounce here coming fairly soon.
Yeah, I mean, if we go back to earnings for a moment here, first quarter was decent. It's just the guidance going forward with that uncertainty around there, with what's going to happen with interest rates, what's happening with supply chain constraints. Of course, we know that many of these tech companies have that exposure to what's happening with China and the supply chain. And I think it's going to take a couple of quarters to kind of iron this out and get a little bit more clarity into the future here.
Yeah, as you said, earnings season hasn't been terrible. In fact, the earnings estimates that were available right at the end of the quarter, both for earnings per share and for revenues, the actual 65% of the companies in the S&P 500 have reported already. They're pretty much right on target. They have met the EPS growth rate and they have met the revenue growth rate thus far. Now, again, we're only about 2/3 of the way through, but that's not so bad. So despite the war, despite the pandemic, despite what's going on in China, all the things you mentioned, overall, earnings have held up. And even more remarkable, I think, is forecasted earnings for the remainder of this year, despite the fact that there's a lot of talk about a recession right now. Corporate earnings estimates have actually held up very well for the remainder of this year.
And what are your thoughts going into the FOMC rate decision tomorrow? I mean, it's inevitable that we're going to get something, but any thoughts in terms of how much?
Well, I mean, you can look at the futures markets. That's one of the only guides we have. The Fed funds futures have had about a 100% probability of not just a quarter point hike, but a 50 basis point hike tomorrow. And then another one on June 15th, which is the next meeting, also now at 100% probability of a half a point hike. So when you hear people talking about, oh, we're going to have 10 rate hikes this year, that's assuming all 10 of those were quarter point hikes. You get a couple of half point hikes like we're going to get, it probably won't be a total of 10. And ultimately, it depends on what happens. If we actually go into a full-blown bear market everywhere, or if we see an economic recession coming up, or if we see a major meltdown in consumer spending and that sort of thing, or a big uptick in unemployment and jobless claims, I think the Fed will probably pause at that point. But at this point in time, there's a 100% chance of a half point hike tomorrow.
Right. And to your point, with the Nasdaq-100 being in bear market territory, that sell the news or even perhaps buy on the news, I mean, it feels as if things have really had a valuation reset, certainly over the past quarter and through the month of April.
Yeah, and there's no question valuations were very high at the end of last year. I mean, we had a monster market last year. Every single sector of the market was up. In fact, the worst sector was up double digits. It would have been hard to lose money last year unless you shorted the market. So everything was expensive. But yes, so far this year, that's not the case. You get a 20% decline in technology stocks. Some of them start to look a little bit attractive. Not necessarily the brand new companies that are struggling to even generate income. Those that were launched, via SPAC and those kinds of things, they may not be great. But if you've got a quality tech company that's been out there for a while with a big balance sheet, a big product, portfolio that's generating income and revenue, some of those have gotten to start to look a little bit attractive here, I think.
All right, Randy, I appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.
You're quite welcome.